General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, so need to do Friday. Okay, I'm not that far behind. Not far as behind as I thought. Oddly enough, the anchor point was Wednesday. I mean, Monday, Wednesday. Monday, Tuesday, Wednesday, any one-sided delivery week, no daily high was taken. We came all the way back to the old monthly high, which is interesting. So we could say 10 minutes here today, the old monthly high. It wasn't TGIF. Definitely was a no trade day by not being a TGIF. It's just weird. Monday, Tuesday, Wednesday. This is what, 3 drives? Down, down, down. It's just down all week. It's not no textbook profiles. I mean, it's kind of giving New York reversal, but it's so delayed. It didn't even really do nothing but come back to Asia low. we got an opportunity before 12 to sell. London How today. London How today. Mm, I'll find just the old monthly high. You can say this old weekly low from whatever week this is. I believe it was at like the H4 flat bottom somewhere. But I think that was like this day. And then we just melted through it. Came down here. This gap up week filled the gap and swept this just like accumulation week low. This kind of feels like original consolidation vibes. It's not previous weekly low, it's an old weekly low. Interesting enough, well, it do make sense. We still have this old draw from a long time ago. Okay. Every week, even though intraday price gave good runs, this move down was highly inefficient. Efficiently delivered. We left flat tops, gaps, and one day highs. Um, so most high probability highs and lows have been made in Asia station. But this is an ugly candle. And my phone. Okay, let's do this. Mm, it's just ugly. This is what I mean. Just inefficient. You could say, like, we didn't close here. We still didn't close here. We closed here, but look at these days. Push. This is up day, but scoot down. Then they scoot down. No, this push down. Take this low, but nah. Then this day is like, yeah, we're taking out previous week's lows, and then look, this is a challenge. This is a challenging daily chart. Okay. This is a challenging chart. Telling a story. You see how we have trouble pushing down 3 days in a row. We still need to go. We still want to go down. We need to retrace. Two pair orders. It doesn't have enough power to complete the move. So it needs to retrace. I need to do silver. Mm, I don't even know. What this is. You really can't say it's untradeable. Shit's ugly. That's what it is. So it's like choppy, not really respecting gaps or the blocks. It's looking like gold, but I think this is how silver normally look, and I only got interested in the good part. It can't help government shutdown, but dollar, dollar moving, euro dollar moving, so silver, it shouldn't be looking like this. Friday, no, feel like holding or being respected. That is a sign of time distortion. Okay, so this breaker block almost did the job. We didn't come up here, and we took unemployment. We took Thursday's high, but we basically just returned to EQ of Thursday. let's make sure. Mm, we still need to get this. I understand. Well, that's a good target. But price has just been, what's this? The last one, two, three, four, five, six, 7, 8. We've been in the range for a week. For a week. Let's see this. This is swing trading. Pair. Got a rate. So either leave this range or for it to hit a range just for trading to fade the move. It's a beautiful Friday delivery. We have London low today. We even have bullish S&T here, but it didn't really give us the retracement entry. This was the Wednesday move. You would have got out here. You would have wanted this if you had some runners. You would have got it too. Friday wasn't an entry day. Oh, it's a final TP day. Thursday could have took majority off. Monday high. And Friday could have held for final TP. One liquidity pool higher to maximize the move of the week. Okay. Mm, still kind of ugly. I think you could have did it still because New York, it really was after this, the dollar started to move. Retracement here, where we at, I believe we're on the H1. Yeah, we need a retracement here. And new week opening gap this tap. I do like this for a Friday. Like buying this, I can see that. This is the anchor. Sometimes that thing's annoying. So it's Wednesday midweek reversal. Do like this. That new week opening gap tap. Never. Okay, that'll be like the next draw. This, this could be where we get a retracement. Friday took out previous Friday's high just for this week's delivery. Reaction gap on Friday to push price to take out previous Friday. And interesting enough, we never did come back here, but it's given like we can officially start buying down days. And I do like how we respected this open price. Hmm. Let's see. What's the textbook? Bullish day after a bullish 1 for 2. One candle took out 2 candle highs. Hmm. Again, this is SMR, and we can start buying. XC has hit this key level and had a small reversal as well. Mm-hmm. We don't need this. We really don't need this for the Fridays. Okay. Yeah, it was Monday. Yes, it is. Previous week's low, or old weekly low, really. that. All right, y'all have a good day. Peace. All right, so things caught up. Let me get my clipboard. Look at these charts. Monthly's bullish. So I want to see if I can find the text fast, but I don't see it. This is old all-time high. And this is a monthly high. I think that's the one we just bounced off of. Let's put previous one slow. This is a fresh. Current tool below. Current tool below. Let's lock these. Weekly. This volume imbalance sticks out. Put this inside. Current tool below. I'm gonna lock this. It's premium level from the weekly perspective. We closed here and then we opened here, so weekly volume balance here, and we can grade this with the wicks on. Let's switch the colors to the weekly color. Current from below. Let me unlock this. Is this box locked? Okay, let's go to the daily. I want to see this up candle. This is the highest up candle we have in the range. It's a daily level. Current tool below. Let me unlock this. Be like our order block. I will watch this if the 20-day look back low. It's a daily level. me unlock this as well. From the H4 perspective, it looks like this is just the old high, but we broke through it, came back through it. It's like a mile marker, this weekly high. We go back above this, we can start saying, okay, this could be like just retracement, re-breaking back through this H4 level, by the way. We can start looking for higher prices. Lock this. Don't see too much below price that really catch my eye. This area just in itself, we broke through this. Yeah, I'm not interested in that down here. Nothing in this interests me. I could look at like previous week's high, previous week's low, that type of thing. And we'll lock this as well. Let's see what we have on the H1. This is like our real killing grounds. Whole new week opening gap here. Turn range liquidity pool. Above price. When the last time we tried to sell, or when the last time we tried to buy? We tried to buy here. Crashed through it. Kind of reuse this level for sale, so we don't need a level here. Turn range liquidity. Kind of like previous days high. This EO here. Yeah, that's it. Don't want to overdo that. Okay, here, this is like it here. We already hit that, so this is the monthly previous month's low. Hold up. And we lock this. Weekly, we'll be working with this weekly order block. There's order block here. Current low. Like it. We already got this previous month's low, which is right here. Kind of playing within this. this volume and balance. Here. Weekly balance high. This is weekly volume and balance low. Let's make them dashed. Control. We'll lock this. Where is the shortcut thing for this? Here it is. Block. Let's go to daily. Yeah, this gap is still working. These are all the gap colors too. This is daily fairlight gap. We lock this. This is the weekly order block. We'll see if we break this and then we can start looking up here. This is also interesting as well. Below price. That kind of covers the 20-day look back. This inefficiency got tapped, but there is no down candles here. I just guessed. It's a perfect guess. Well, I've been practicing spelling inefficiency. I was a trading teacher. English, math. We in this H4. It's just tacky. Yes, this is working. For last order block used. We didn't get a good expansion though. Like we should be going super high. Sunrise liquidity. Bam, make this bigger. And lock this. Pressure still come above here. We should see if we come back to this last order block that we use. If we break above this, we gotta start looking up here. And let's go to the H1. We shouldn't need anything here. I do like these equal lows. it's an H1 level. We still got that internal range liquidity there, but for the most part, we just kind of stuck. Let's look at Euro. This is actually previous month's high, so this is important. Like that. We just took previous month's low. So this should hold. Then unlock this. Weekly, looking at this old weekly high. This is a mile marker. Old weekly high. It's a good target for this week as well. And unlock this. Then we also watch previous week's low. Watch this going into the week. It's kind of choppy, but these levels close to each other, making it kind of easy. This candle toward this whole candle should serve as our order block zone. And that counts as a discount level. Locking that. Next premium array would be here. We do need buy side in this volume imbalance. We got sell side. Give me lock down. Look like we came to beat previous week's EQ. Here we got us an H4 fair value target. We also could sell here. Current tool below and lock discount level. This is like an internal range liquidity sweep into the order block. And this goes on the bottom center. Lock this. From the H1 perspective, we still have our fair value target. We can enter here, kind of playing in here. This is that volume imbalance that needs buy side, and it has internal range liquidity here. I do like this as strange liquidity paired with an inefficiency. Mm-hmm. Like that. That's my plans. Let's get to the daily charts. So I have to go in the week with. Okay, it's not too cluttered. This looks cluttered, but it's just because all these new week opening caps. It's better. Price plays with those new week opening caps too much to take that off the chart. Lots of SMT. You know SMT over here. Okay, there we do. Alright. Euro bounces off the 200-day moving average. That 200-day moving average, everybody need that, even if you smoke like that. You need to see what retail doing. Yeah, Elon Musk to go $1 trillion. Conservative. Getting used to the government shutdown. And my process. Feel. Get my trade list. I can add more risk to the move of the week. Let's look at all this stuff. What holidays they got going on? What holidays we got going on? Shoot. November 12th. So nothing. No news until government open back up. Until government reopen for business. That sounds professional. LCOT. Until government reopen for business. CME Fed Watch. This is probably all we got. Okay. Chance for rate cuts. 66%. Government shutdown. It's messing with rate cuts. Because Powell is thinking about loss of jobs due to government shutdown. Yeah, he's thinking about loss of jobs. He don't want to cut rates because of loss of jobs. Do we have good earnings this week? I don't think so. Palantir, Hims, AMD. What's this? Hold on. Current week. Plug. No. Yeah, no top 10 earnings. QQQ this week, SPY this week, hey. 2% weight. That tells you right there. Shoot, this 3 from the QQQ and 8 from the SPY, and it's sorting them by open interest. Come on, screenshot thing. Boom. Top 10 earnings. See what the sentiment is. Bullish for the most part, but a lot of people have cash on the side. Earnings is pretty much over. I think that's kind of the thing. Do we have spaces here? Yeah, NASDAQ. 9 weeks of days. One, two. Here. It's just 9. Turn the 6 upside down. It's 9 now. Notes. I don't really have no notes. Thinking engage. Okay. Let's get 9 weeks of days here. 1, 2, 3, 4, 6, 7. Just the 9 here. Okay. This is silver. Then euro. Let's get the 9 weeks. 1. Man. Let's see what's going on here. We finally got that. Kind of got like a buy side of the curve thing going with euro now. Market maker buy models. My voice be going in and out. Okay. And we're engaging. Put a space here too. Engaging over here. know. I think this is sideline because Lord knows that daily chart is ugly. We need to break. We always engaging over here. Sideline for silver. Engage on euro. No, so can retrace and sell. Nasdaq. Hold on, no. This is November. This is the most bullish one ever. For the most part. Price has been selling. And we can still take this week. I'm thinking that if the 20-day low, like after that, then we can reaccumulate. Like for real. But we could just buy from here. Look how we bought from here. 50-50. Macro delivering. It's freezing. To go up and down. So thinking scalp daily profile and textbook. Institutional overflow. After anchor. Point is established. And then over here, this, we're in the range. This trap order flow. It's best to stay sideline until we hit a range extreme. You know how easy it is to push the button? Gotta stay sideline now. Here, looks like we gotta turn around from Big C. And also, all like Supreme. Here. For real. Our anchor point here, making a high, should stay until September 25th low is taken. Which is this? No, here. No, October 25th. Hold on. Did I close Notion? Probably did. October. For here, thinking we in that double purge range. And both sides should get swept. So I'm waiting. I'm looking for interaction. How we have a small money reversal. BPR. Thinking we can lead the range. Since we hit the 20, 40, 60 low. And I've seen hit the 200 SMA. So we tell It should be 200-day moving average. How does this look? Did I put that? Story price government shutdown. Um, Earnings and China deal with rare earths. That should have pushed us, but you know, silver. We just retracing. Government is still spending too much. So metals are still bullish from the macro perspective. If we looking for fair value areas to look for buys, Euro's been beat down, and the dollar is bearish. Retail is selling dollar no matter what, and I don't even think it's retail. I think it's like just people know like the dollar ain't really finna do nothing. We're risk on. And even if we was like, let's trace and journal intent, it's gonna be daily profiles, case hunt, study plan, daily delivery objectives. Tuesday. Okay. That's that on that. We done. All right, y'all. Y'all have a good day.